Good afternoon, Noah. I'm Tom Mendoza. I'm a deal partner at EQT Ventures. We're European-based, operator-led VC. We back founders at the Series A all through the C rounds. And next to me, we've got Richard Hartley, CEO of Cytora, one of the most exciting InsurTechs in Europe that we've been fortunate enough to back at the Series B earlier this year. To get things started, Richard, can you just tell us a little bit about Cytora?
Absolutely. So Cytora transform underwriting for commercial insurance, and we do that using artificial intelligence. Commercial insurance is one of the largest industries in the world. It's a $1 trillion industry. We help insurers underwrite more accurately, improve the efficiency of their underwriting workflow. So we help them automate key parts of their workflow so they can process more submissions faster. And we also help them grow into new areas of the market where they don't have underwriting history, they don't have claims history. So we help them actually grow as well. Zooming out a little more, most insurance companies are very manual. So they're huge organizations, they're maybe 300 years old, and they're right at the start of adopting AI. So it's a really interesting period, and what we see is this big transition from being a manual, company very much driven by human capital, to more of a technology company, which we've seen with obviously Goldman Sachs in the last 10 years or so in capital markets.
Yeah. And you touch upon this. It's one of the largest industries globally, and it's manual. Can you share with us some insights as to what are the key factors driving tech adoption now in commercial insurance?
It's a great question. So I pick up two major factors. One is there's real pressure, kind of secular pressure on the expense ratios of insurance companies. So that they're having to adopt technology so they can actually serve their customers in a cost-effective way. To give you a sense, for a kind of a £2,000 insurance premium or insurance policy, they're only going to make a £100 profit on that particular policy. So they absolutely can't have a human spending any time on that business. And today, that is purely human-driven. The kind of anecdote we often hear from CEOs of commercial insurance companies is every time an underwriter picks up the phone to speak to a broker, we've already lost money on the risk. So that's driving this very clear direction towards automation. The other I think is driven more in the SME segment, more by experience. Business customers expect a faster way to buy insurance. They expect a simpler way and a more transparent way. And they expect that because they're getting that from their bank, they're getting that from Uber and many other experiences, and they expect the same thing in insurance. So that's driving insurance companies to really change how they offer their product and change how they underwrite.
And you have some pretty large customers today, such as AXA, QBE, Markel. Can you share with us some examples of the value you're delivering and the ROIs for these customers?
Definitely. So what we're seeing with our customers is we're helping them improve their risk differentiation so that they can differentiate risk in a more granular way, which helps them improve their loss ratios, which is really improving their underwriting profitability. But also, because with Cytora, they can process more business because each underwriter actually has to spend less time on the submission or no time on the submission. They can reduce their expenses too. So typically what we're seeing is between a 5 to 10% improvement on their combined ratio, which is really meaningful for them and constitutes tens of millions of pounds a year, which really underlines the contract values we're seeing from those types of customers.
And following on that point, beyond the automation of the manual tasks, what do you think are the opportunities that AI and specifically Cytora opens up for the commercial industry?
The first, I think, obvious change that's happening is underwriting is becoming a variable cost, which is very similar to what we're seeing in the communication space, where you can spin up an entire call center and only pay based on what you use. The same thing's happening in insurance, where it doesn't matter if you're processing 10 submissions or 1,000 submissions or 1 million submissions, your costs scale based on usage. And that's changing the whole cost structure of these insurance companies. And it's allowing them a lot more liquidity so they can start and stop writing business very rapidly, allowing them to change their risk appetite and their portfolio appetite on a very real-time basis. before that's happened on an annual basis. That's really transformative. But secondly, the whole barrier to entry of starting an insurance company is really reducing. So we're seeing many more insurance companies setting up. They don't have to go and hire an underwriting team. They don't need expertise. What we can offer them is to replace all of that requirement based on how data has been used and how AI is learning the patterns on the data to select the right risk for the appetite of the insurance company.
I think we've got time for a couple more questions, but just if you could tell us, share a little bit of insights into what's ahead for Cytora in the coming 12 to 24 months.
Definitely. So we're kind of thinking about how we scale on two axes. The first is geographically. We were very much founded as a UK company, but we will absolutely joint headquarter the company in the US, which is by far the largest insurance market. And that kind of follows on from the expansion we've already had in Australia. So the geographic scale is super important, and we're being pulled by our customers to do that, who are all globally diversified enterprises. Secondly, we're also scaling in the insurance value chain, and that's pretty important because there's a very, long chain of how a transaction happens, from the customer to the broker to the insurer to the reinsurance broker to the reinsurer and the retrocession capital. So we're building products that can be win-win solutions for all parties on the value chain. So risk can be transferred effortlessly at low frictional cost, benefiting the customer all the way to the reinsurer. So we're kind of expanding from our position purely to focusing on the insurance company to also reinsurers, brokers, customers.
Yeah. And maybe related to Cytora, but in general in InsurTech, we've had innovation in obviously underwriting, in claims, in fraud. But what would you say in the other parts of the value chain that both Cytora is exploring, but that are in generally you think are going to undergo disruption, and are probably the low-hanging fruits out there in the value chain and in the tech stack of the insurance companies nowadays?
So I think SME insurance is absolutely going to change fundamentally. I think there's a big possibility that we'll see new companies writing SME who weren't doing this before. It's a bit similar to how we've seen consumer lending migrate into the wheelhouse of wholesale banks, like what Goldman have done with Marcus. And that's not because Goldman Sachs now are doing traditional consumer lending. It's because consumer lending has become digitally distributed and it's become underwritten in a systematic way. I think SME will be the same. The way to be profitable in SME is to do it in a purely automated way, beautiful experiences to the customer. All the underwriting is done by machine intelligence. So I think that's going to change a lot. And I think also in the claims side, I think that's also will change. Where a lot of claims processing right now is manual. You have a lot of loss adjusters who read the claims reports, and they spend a lot of time working out, are they legitimate or are they fraudulent? I think that most of that in kind of low value claims will be also done by technology. And we're seeing great companies in that space at the moment, taking a lot of cost out of that equation, also improving the performance of spotting a kind of illegitimate claim.
And just switching gears a bit, if we, in a future world where, Cytora is very successful with your underwriting API, and if we take the trends that we're seeing in FinTech, where we see consumer companies like Apple getting into consumer FinTech, do you see, two questions, do you see that happening also in insurance? And secondly, if so, what role do the actual insurance companies play in that future?
It's a really great question. I think insurance will be bundled into different interfaces. I think that will happen. I think it's going to require some creativity because insurance is I think it's a less attractive product to the consumer. So I think it's going to be a longer curve for that to happen than what we're seeing in lending right now. And it's a harder distribution strategy generally to get people to buy insurance because you're having to get them to pay you money as opposed to a lending company giving you money. So the actual cost model is different. On the kind of, I guess, the point of, what was can you just repeat your first question?
Yeah, so I guess, are we going to see like consumer brands distributing insurance products as they're doing with FinTech, but then what role does their insurance company itself play in that future world?
Yeah, I think on the second part of the question, I think insurance companies are, the ones we've spoken to, aren't clear on whether they're a distributor or a manufacturer. So I think that's very much a contested space, where if you think about an insurance company, are they the IP like Intel, or are they the distribution like Amazon? It's actually not clear. Like, insurance companies, what they're good at is generally capital allocation, allocating capital to risk. So I think it's more likely we'll see insurance companies as the IP. I think they're more likely going to be the manufacturer. I think the distribution will go in the direction we thought about, where it will be people who are great at experiences, they hold customers, and they're very good at things like process orchestration and product recommendation.
Yeah.
I think that's the future I think is most likely, but I think it hasn't been defined yet, and I think it's very much a contested question.
Got it. Thank you, Richard. That's been great talking today. Thank you so much.
Sure. Thank you very much. Really enjoyed it.
Wonderful.